Good afternoon, everyone. Well, every time I keep on saying the market's volatile, the next week it gets more volatile. And I mean, this week we've had some of the most mind-boggling moves. I mean, we've been moving 5 to 10% in indexes, just chopping up and down as if it's nothing really. I mean, on Monday, I remember when I got to my trading screen at 6:45, the Ftse had traded actually 4,700 overnight, and we opened and we actually rallied to 51. No, we rallied up 300 points, up 400 points from the low. Then we came back off 350, and then we came back up 400, and then down 150 or something like that. And I mean, you know, a good day normally, you know, would be a 150 move in the Ftse, or even a 100 point move. But we've been just getting the most ridiculous volatility. And yesterday, I mean, we saw the Dow up finally about just over 500 points, like 560 points, after being down 150 just after the statement. Then we had a 700 point rally. And I mean, that type of thing is scary, really. I mean, if you get on the right side of it, happy days. But, you know, you get one bit wrong, before you know it, you're going to be so far offside. And that's why it's very dangerous just to try to keep your head above water right now. And if you're looking at the screen right now, the volatility, just the euro, if I just show you the euro right now, just in the last few moments, we've just come off. We were trading 143.50 just about 40 minutes ago, and now we've come off 130 ticks on the back of a rumour that there may be a French downgrade, which, well, you know, it's I don't know how much. I mean, it certainly could be true, but you know, it's just a rumour right now. So, you know, there's just general jitters, especially after the US downgrade. Bunds have been going up. Bund's pretty much has popped up 30-40 ticks on the back of it, and indexes have all gone down. I mean, the Ftse was up about 18-90 fat ticks this morning, and now it's down 72. So it's been about 160 point swing, which by recent standards ain't that much, but still a big swing, you know, any stretch of the imagination. And we're just looking at it now, and it just chugging through, very little liquidity, small volume, just pushing it down. And no one's really being passive in this market right now. I mean, if we just have a quick look at the Bund, and we can actually see this is the 5-minute chart, and we can actually see how this was the rally on Monday. We reached just below 133.96. We came off 100 ticks, and then today we've been coming off as the markets were going up earlier. But then, since then, we've just gradually been going up. Tested this double top over here, little pullback, but then carried on going, and the pace of increase has accelerated now. So I guess the next target will be the high from Monday, so 133.96 if it gets up there. But if not, I mean, 133.22 is the next level of support after it being resistance over on the 5-minute chart. Go to the 60-minute chart, we can sort of see the massive uptrend. It's about 750, 800 tick move from the start of this move upwards. And we're actually coming to a very significant point here. This 133.70 is actually bounced off it 4 times, and the 133.96 I guess was a bit of a false breakout. Broke out a little bit, and then we came all the way back down. But as you can, again, looking at the divergence on this, though, it's a negative divergence, as we can see here. So, you know, the relative strength from the first move to the second one to the third one have all been going down. So, you know, it looks like this might still hold, looking at the relative divergence. But to be honest, on another technical pattern, we actually have like a bullish wedge, if you look like a rising triangle there. So what's happening is the volatility was a lot bigger here, and then it's getting smaller and smaller, and then when this tends to happen where the resistance stays the same but the support keeps on rising, it might just be a push to the upside. So got a bit of a conflicting signal with the RSI saying that showing relative weaker divergence, so pointing to a possible down move. But then we have this very strong setup here where we're having this bullish triangle over here where we might just break out as the range is getting smaller and smaller, and this resistance is getting is in a battle with a rising support that we have over here. So, and if that breaks, then go to 130. There's no real levels that I've got how far we can actually go. So I can't see it being too much, because it gets to a point where the yield just doesn't make sense at those levels. But if we do come off, the first port of call we got right now is 132.30, and then if we look at the fib retracement from the big move up that we initially had, the 38.2 retracement is 130.96, so that's still 300 odd ticks away. And so long-term targets for a pullback are 130.96, 130.08. Short term, if we go back to the 5-minute chart, short term is 133.22, as I said, or there's this point here, 133.35. So those are the short-term points. If we go to a 1-minute chart as well, just seems to be a very strong uptrend. And so I guess in terms of, if we just play this range right here and put a trend line on this move up, then I guess the next support level right here would be 133.58, and this would basically be hugging the current 1-minute trend, so that could be a point to enter again if we're still long. Euro still falling. If we look at the Schatz, where's the Schatz? Yeah, Schatz, this is on 60-minute. It's a big uptrend over here, just to illustrate the point. About 160 flat tick move, and we've had certain support levels at 108.48.5, and then we had a pretty strong one here at 108.84.5, but we're 60 ticks, 70 ticks away. And again, we're starting to see increasing support, and the resistance is staying the same, and we've sort of popped up above the 148 right now, so we're 153.5, so we have actually broken it. Let's see if we're looking at a much longer term trend. This is a 4-hour chart. See if there's anything that we've got on this particular contract, and I don't really see anything. So if we keep on going higher into the 110s or something like that, it's pretty much implying that we might have a rate cut by the ECB. But we're in a very strong uptrend right now, so I guess the safe strategy right now, just buy the pullbacks as always. So if we come back towards this, if we go back to, let's say, a 5-minute chart, so if we come back to 109.39, 109.40 could be a good level to buy again. Or otherwise, if we actually break it, then we might be coming back towards these levels, 108.83. Just want to show you some of the volatility if you haven't already witnessed it already. Firstly, let me just show you in the DAX, just purely because it's just insane. From the start of the move down that we had a couple of weeks ago, we were trading at 72.96.5, and we have come off 1,700 ticks, which is just phenomenal, really. And 1,700 tick move down, and then we have rallied 625, and then from the high point that we had here, almost reaching the 38.2 retracement, that's 70 ticks off, but now we've come off another 260 ticks from the high that we had this morning. It's a bit crazy, really. And if we go to the 5-minute chart, we can see near-term support is at 57.21, which seems like it's far away, 130 ticks, but I mean, you know, the way the market's moving, you can easily reach that and batter it or bounce. We go to a 1 minute, just pretty strong downtrend. We've just dropped 160 ticks in the last 45 minutes on the back of that rumour of a French downgrade. We've just come off there, now we're sort of coming back up, and the longer it goes without a downgrade by any of the agencies in France, then I suspect that we'll come back up slowly but surely. A quick look right now at the Ftse as well. Again, we pretty much come off 1,100 ticks, which is well over 20% in the last 2 weeks, and we're looking at the whole move down. We can see that we just rallied from the low a good 500 ticks from the low, which is phenomenal, and we sort of reached the 38.2 retracement on the move down, and we sort of broke it. We went midway between the next level of the 50%, but from then, on the back of this French rumour, we've come off 160 ticks, as you normally do. But this volatility, it's fun to watch, but it's just very difficult to get right, because depending on how big your account is, if you just get it a bit wrong, it just could be a bit of a nightmare. But on the flip side, if you catch a move, it could be happy days, really. So as we see, we've all bounced off our lows. Bund's come off a bit, and so let me just go over a couple of Euribor spreads right now, and we're just seeing some pretty big moves as well on this. I'm going to show you the March 12, June 12 spread. Look at it on the 60-minute. We were actually trading 9.5s not that long ago, and then after that ECB meeting last week, we have rallied quite substantially in all of these spreads on the back of the bond buybacks. So this is where we were trading before. We're in this sort of range, 8.5, I'd say maybe 10.5. So we're trading that for quite a bit of time, and then we broke out. It broke out pretty big for a Euribor spread, considering it's that far out, and we reached as high as 15.5s. I don't think 16s were available, but now it's been in a range between 13 and 15.5. So it seems like that's the new sort of range that we've entered into this spread. But I wouldn't be surprised if it breaks higher or lower at any point, and just got to be a bit wary during these times. And it's pretty much a similar story for all the other spreads as well. Set 12, Deck 12 has been an interesting one further at the front. This spread has moved from a low, I think, of 5.5 pre-ECB last Thursday to trading as high as 13s at one point, as you can see over here. I think we've been trading below, I think 5s were the lowest you could have got, and as you can see, this is not really what we want, but we've had quite a big move, an 8 fat tick move up in this spread, which is enough to wipe out some Euribor traders if they're just trying to short it and not stick to good money management or anything like that. So now we've gone to the bottom of this big range that we had. We're around 10s, so it could possibly be a good buy here, but otherwise we could come back down here as this French rumours of a French downgrade and etc. And if we start showing signs of frailty again. So so it's just been definitely a very, very volatile time, and good luck with everything, and hopefully I can still try to make some use of this volatility, and then we'll catch up again next week. Good luck for the rest of the week.